Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for September the 27th, 2011. Now, to get started for tonight, we're going to be looking at the December S&P 500 futures. We're going to see a lot of volatility coming into the market again. We're hearing rumors of a possible bailout in Europe, more of the Fed trying to pump up his equity markets, and the reality is that we may get a short-term boost higher, but that's going to likely be very, very short-lived. We have a lot of ongoing problems here that are unlikely to go away. So the reality is shorting here would be the better play. Now, looking at this, we've closed at 1158.40. Some of our key levels: 1146.30, 1157.80, and 1168. So we've still closed below that key level of vantage point. Now, our predicted short, medium, and long-term differences are continuing to stay below that zero line. However, the short term is breaking higher. Our predicted MACD and our predicted TSI remain in a downward spiral. So, and we're somewhat, again, what I want to point out here is we are not even remotely oversold here. Plenty of room to move to the downside in my respectful opinion. So in short, what we're doing here for tomorrow is we're going to be watching these fundamentals. The volatilities, we're likely to continue to see these wild swings in the market, but clearly the primary trend here on the S&P 500 futures is down, as identified here by the Vantage Point software, dating back until the end of July. So effectively getting into the market just under this 1350 level, where you can see I have this small line drawn, the market has essentially just moved down. We've had a couple of retracements. We've come up and we've retraced up towards this double top in this 1230 area, and again a failure. But you'll notice that the triple EMA cross during this period of volatility never completed. It remained to the bias to the downside, even during extreme volatility, including the FOMC last week. Now, even with my own clients, it was a week ago from the FOMC that I advised to get in short and said, regardless of what the Fed states, the S&P 500 is likely to continue to move lower, which is essentially exactly what happened. QE3 may have had a minor effect on that, but again, it would be very, very short-lived. Now, going into our daily report for tomorrow, we're looking for, again, an entry point here. Tomorrow we have 1167.40 and 1131.60. That's the range. Now, your aggressive traders can use this 1167.40. Your less aggressive traders, what I would be careful of is that because of this volatility, we could push higher. Now, I'll point out this in a minute, what we saw today, the market breaking through that Vantage Point predicted high. So your less aggressive traders, they can hold out and keep an eye on the 1175 area. It's possible we could move up to that area in volatile markets. Now, again, if I look at the Vantage Point predicted high and predicted low for the day, we can see that this level is broken today. It broke above the Vantage Point predicted high, but it still managed to close back below that level. A lot of this rally, by the way, came at very, very late in the day, which is indicative of short covering. Basically, people closing out their short positions because they don't want to hold overnight, and that includes myself. I was short twice today, or 3 times today on the S&P 500, but I did not want to hold anything late in the day. Once London went home, basically, I closed out my positions right around 12 Eastern Standard Time. So keep an eye on this for tomorrow. But again, we are going to see some volatility. I expect it is possible in the days and weeks ahead that we could push back towards this 1231 area, but very unlikely. I would